Hey, what's up, Dividend Nomads? Happy New Year. Welcome back to the channel. Today, I'm going to give y'all a complete end of the year recap and show you everything under the hood of the portfolio and see what we've got up to this year in the portfolio. I'll try to make this video as fast as possible, but this is New Year's Day here in China and it's 9 o'clock in the morning. So for y'all, it's not even New Year yet. You're still in 2024 and here I am living in 2025. So anyway, let me record the screen, get into this portfolio thing, and I'll show you what's going on here in the portfolio and everything you need to know about how this has been working out so far for the year. If I can record the screen, I'm trying here. New screen recording. Okay, let's capture the whole thing. 3, 2, 1, bam. Okay, so here we are inside of my computer today. I got my computer here. So if you see me looking over here, I'm doing that. But here we are in the computer. Let me make this bigger for you and we'll take a look at some of this stuff here. So here's the value versus contributions, and this is from May until December. Now the reason why this is from May is because I opened this account in May, but I didn't start spending money in here until June, and I didn't even get paid until July. So you'll see that in a minute, but for now let's just have a look at this. So from May until now, we've got see, here's the very end of the road here, $60,000 in value and 51,000 invested, which means if I sold every single thing I have in this portfolio, liquidated it and walked away, I would walk away with more money than I started with. Not a lot more, but I would walk away with more, and that looks like $9,000. So if I liquidated the entire portfolio today, I would have 9,000 more than I started with, and that was 6 months ago basically. So that's that. Now let's go see how we're performing compared to the markets. So again, you can see this is from May until now. We've got 16% total return, right? 16% return. So we all know on average stock market usually produces 8 to 12% per year, 10%, something like that. We got 16%. So we're doing better than the average. Let's see what that looks like compared to these other things here. So if we compare to the Dow, why is everything on here? Too many things on here. Let's check out the Dow first. So for the Dow from May until now, 9%, we're 16%. So we are beating the Dow. Okay, so let's go check out some more. But we were doing really good here, and just recently, like we just had like the past 2 weeks, it's been really terrible, and boom, 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 we just dropped down a lot. Look, at one point, we were 34%, and they were 14%, and then all of a sudden, this last couple of weeks sucked. But it is what it is. Let's check out the NASDAQ. Here's the NASDAQ. Look, we were way below the NASDAQ over here. And then we climbed up and climbed up and climbed up. And look at this, at our peak, we were 28 and the NASDAQ was, we were 34 and the NASDAQ was 21. And then just recently, the big sell-off, we lost a bunch of money there. We closed at 16% and the NASDAQ closed at 18.9%. So the NASDAQ did beat us. But, it's not bad. We're still 16% return. It's pretty good, so I'm not going to complain. Let's check out the S&P. S&P looked similar story. S&P was way ahead. And then look down here. We were minus 20%, and the S&P was 4%. And then we just came back on this massive rally here. Look, 28%. We came up even more. What's our highest point? 34%. We were up to 34% at one point in time. And then now we have the big sell-off coming down. NASDAQ fell, we fell, but we still closed higher than the NASDAQ slightly, 16%, and the NASDAQ closed at 14%. So we did, or the S&P, sorry. We did beat the S&P by a little bit, but not by much. But beating the S&P is good. Most people can't. So we're already doing better than a lot of people. Russell, similar situation. Look, we're down, 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 way down here, 20% again. And then look up here, 34%. 17, and then at the end of the year we closed out at 16. The Russell closed at 8.9, so we beat the Russell by a lot. So if you're investing in just the Russell or the S&P or the Dow only, we beat you. But the NASDAQ we didn't quite beat, but we were pretty much there. We were just slightly under the NASDAQ. So a 16% total return for the year is pretty good, not too bad. So there's that. So now let's go have a look at the portfolio, the positions, and see what's going on there. But first, because everybody always asks me about this spreadsheet, where did I get it from? Give it to them. I can't give it to you. I didn't create it. If you want it, you can go here this guy right here, Rain, this is where I got it from. I don't know this guy. I'm not affiliated with this guy, nothing like that. But I watched his videos a long time ago, and I downloaded the spreadsheet from him. So if you want the spreadsheet, you can go here to his YouTube channel, and you click on more, and the links are there. Just click the link, open it up, download it, and there you go. So there's the spreadsheet. So here we are in the spreadsheet. First, let's go have a look at the dividend log, and then I'll share with you all the stuff under the hood of each individual position. But for the dividend log, this is what I was telling you guys about. Man, hopefully this thing don't mess up on me. Let me get out of here and go back. This thing's annoying sometimes. Anyway, so here's the dividend log. You can see up here, we didn't get any payments because I didn't have this portfolio like I told you. It said we started in May. I had the money in May. I started buying in June, and we got our first payment in July, and that was $964 from Ulti. You can see August. You can see the payments here, Ulti and Coney. And then in September, we've got Ulti, Coney, and Misty. And October, same thing, Ulti, Coney, Misty. November, Ulti, Coney, Misty, Tesla. And then December, the exact same things. We haven't received a payment in 2024 from NVIDIA. So that's there. So let's go have a look at the end of the year thing. It's easier to see over here. So here we go. Our first payment was $964. Our second one, $1786. So it grew. $2665. We grew more. $4,041. We grew again. $54.89. We grew, and then December it came down. $47.41. We didn't have a good month in December compared to November, but we did beat October. So anyway, we closed out the year, the 6 months of investing in this portfolio, and our total dividends received were $19,690.50. So we got $19,000 in 6 months. Not too shabby, I guess. So let's go check out the positions. And I'm not going to show you some of this stuff because some of it's just boring that you don't really care about. But let me make it bigger for you, hopefully, without messing it up. Let me scroll over here, try to make it easiest to see. So first of all, here we are. We've got the ticker, the number of shares, and the cost and the share price. So Ulti, 2,300 shares, $11.69 is my cost, and the price right now is $8.97. Coney, 18.05. The price is $16.90, and it's trading at $13 right now. Misty, we got 450 at $24. Right now, it's trading at 26. Tesla, 120 shares at $11.75. It's trading at $14.27. And then we've got NVIDIA, only 23 at $22.95, and it's trading at 23. And you probably don't care about the day, like I don't really care about what it's looking like today and this kind of thing. So I'm not going to waste time on that. I want to show you the good stuff here. If we look over here, we put it at the beginning. It's easier to see there. So if we look over here, we've got Ulti. For the market return, we're down. Let me make it bigger. Down $6,256. Total return, we're up $530, and then total return percentage is basically 2%. So if I sold Ulti right now and wiped my hands clean, I would still walk away with more than I started with, but not a lot, only $530 more. But I would walk away with more money than I started. Coney, also down $6,967. Total return, $14.23. And then with the market return percentage, you can see minus 22. Total return, we are up 4.6%. So again, it's doing okay. We're up on this one. I could sell it all, walk away with more money than I started with, but 4.6% is not a large percent, right? It's not like super great. Misty, market return $1,000, total return $5,000, and market return 9%, total return 46.49%. So our total return, our Misty, is really, really great. I don't know what else to say. It's just doing really good. Tesla, 302, and then total return 675, market return 21%, and total return 47.88%. So Tesla is actually outperforming Misty. So not too bad here. Tesla is doing really great. And then NVIDIA, I haven't received any payments from NVIDIA, so all these numbers are the same. 920 market, 920 total, 174%, 174. We haven't received payment, so it's not really going to reflect anything there until we start getting paid. So anyway, that's what's going on there, 1.7%. So for me, Ulti, Coney, and NVIDIA are winners, but they're not doing great. And then Misty and Tesla have been doing really, really good for the year so far. And you can tell it reflects in the percentage, right? you're up 46, 47% on something, you're doing pretty good. These are here up. So also I would say they're doing good, just not great. So that's what's going on there in the portfolio. And then you can see the other things here, which you probably don't care about. The allocation, I have 34% here, 39% there, 19, 2, and 0.89. If this comes down, I'll be adding to this on Friday. Yeah, on Friday. And then I want to get more Misty too, but it's still above my cost average. But if it gets below my cost average, I will buy more and boost it up to close to 1,000 shares, hopefully. And then I'm still adding to Coney, still adding to Ulti, but I'm probably going to stop Ulti at 3,000 because this percent is like, it's not like growing a lot. It's not a great percentage here of total return. So there's no point in putting a lot of money in it if the total return is not great. I'd rather have the money here where these total returns are much higher, right? That's the good thing about the spreadsheet. You can actually see the percentage of the return and where it's best to put money at. So I'll keep adding to these two, but not like the biggest priority really. But if they're cheap, it's still a good buy because they are positive. So I will buy some more, but not a lot. And then Misty, I'm looking to grow this Misty because this total return percentage is just crazy. And Tesla total return is really crazy also. So these I'm probably going to be trying to work on improving these positions so I can increase my overall total return. And NVIDIA, it's hard to say with NVIDIA right now because I've just got in it. So we need some time to look at this and see how it's going to perform this year because I just now started this. So I don't know what this is going to be like. So we'll see. I'm not sure about the priority for that for 2025 is going to be. So that's what we got there. Annual dividend, the dividend yield, 111%, 155, 105, 67, 83. Even this is a 67% yield. You've seen that the overall return is really good. Here's the yield on cost, 85%, 120, 114, 82, and 84. So these right here are really good. This one's good too. Cost basis, you already seen how much I'm down, all of that, so that doesn't really matter. Percentage of income, Coney has contributed 49% of my income. $8,000 from Coney. So that's what you got there. That's the spreadsheet. That's what's going on under the hood of my portfolio. And I hope it was at least helpful for some people. And you can get a better understanding if this is something that you want to do or not. And that's really all I got for you today. And if you want to go check out my Roth to Riches channel, I'm going to do the same overview like this of my Roth IRA portfolio and share that with you guys as well on that channel, Roth to Riches. I'll put the link in the description and on the screen now. And I'll see you guys on the next one. Have a great new year, everybody.